My name is Matthew Horncastle, and I'm the Managing Director of Williams Corporation. And today I'm going to be presenting to you our investment opportunity for wholesale investors, Williams Corporation Capital. So without further ado, let's get into it. So this is the presentation I do on Williams Corporation Capital. That was fast. Now, every good presentation needs to start with a legal disclaimer. You can see the full legal disclaimer right there, but the brief legal disclaimer is, I'm not a financial advisor. This isn't financial advice. Please seek your own financial advice before making an investment decision. Now, our agenda today, you're going to have an introduction to myself, Matthew Horncastle, a brief explanation about how we see the New Zealand residential property market, a summary about Williams Corporation, and a summary about Williams Corporation Capital. So, an introduction to me. I am from a property family. My name is Matthew Horncastle. I'm from a property family. Everyone in my family, mother, father, aunties, uncle, granddads, cousins, the whole shebang is in real estate. I'm a qualified builder, so I did my time. I've owned a business since 2011. I see myself as a thought leader in the business space. I'm heavily invested in property at a personal level, and I'm the co-founder of Williams Corporation, which is one of the largest privately owned builders in New Zealand. Now, let's get into the New Zealand residential property market. We're going to talk about the global issues, New Zealand population growth, the New Zealand houses built, the average household size, replacement cost of homes, and the New Zealand average house price. So what I want to discuss in this slide, firstly, I could do a whole presentation on conflict in the world. But the main thing I want to emphasize is the world is a hard place and there's lots of pain and lots of hardship. And I want to emphasize that New Zealand is a very, very beautiful place and we're very lucky to live here. And with that, with being lucky to live here, we just need to remember that yeah, it's just a fantastic place and there's lots of issues in the world. If you look at, say, the conflict between Russia and Ukraine, you look at issues that are happening all over the world, we just need to remember that New Zealand is a fantastic place to live. And then what happens because of that, we have the New Zealand population growing consistently. So you can see this graph here. Since the 1960s, we've had consistent population growth in New Zealand, which is because we're just such a fantastic place to live. And without our immigration rules, New Zealand's population would double to 11 million people overnight. So the main thing that's stopping our immigration from looking like this and making our immigration look like this is our immigration policy. And that's what restricts the growth of New Zealand. But even with our current immigration policy, we plan to double our population by 2050. So we're still facing huge, huge growth. And then off the back of that, New Zealand's houses built every year isn't growing as reasonably expected. So you can actually see that our deliveries per year is down from 2017. Now, consents are up. That is a factor, and that's important to note. But the main thing we're focusing on is deliveries. And New Zealand as a whole isn't delivering enough houses per year. And another thing that's happening behind the scenes is New Zealand average household size is shrinking. So when I was born in 1993, the average household in New Zealand was approximately 2.6 people. And we're now down to about 2.3 people, and that's on a downward trajectory. So what's happening is when you have less people living in each house, you have more houses required without the population even growing. And on top of all of this, the replacement cost of homes is constantly increasing. So throughout my life, the rough rule of thumb for housing inflation is the cost of building moves at double to 3 times CPI. So at the moment in New Zealand, our inflation's approximately sitting at 6%. And so that rule would say that inflation for replacement of housing is sitting at 14%. which is very similar to what we're seeing from the quantity surveying institutes. And what that is causing is the New Zealand average house price to rise. Now you can see this freeze frame here of the 30th of September 2014. This was when I did my first ever property presentation. And what I said is, because of these reasons that I've just discussed with you, these are the fundamentals that say that New Zealand residential houses will continue to increase in value. Now, when I did this presentation for the first time, we had a large flat piece where we hadn't seen a lot of growth in property. And people were very, very critical of my opinion and didn't agree with it. And then you can see we've had this amazing bull run of property inflation. And that's because of the fundamentals we discussed. Now, I want to dive into the last 12 months a little bit deeper. So the average house price in New Zealand today is approximately $810,000. And if you had purchased a house exactly 1 year ago, you'd be up about 1 to 2%. So in the last year, prices have gone up 15% and down 15% to be about 2% higher than they were a year ago. So that's really interesting data. Now you can see in the last 3 years, we've had very, very rapid house price increase. And a big percentage of that is because the Reserve Bank lowered interest rates extremely low. And we also had a lot of government printing of money off the back of COVID to stimulate the economy. And the New Zealand residential property market received a disproportionate amount of that money. And we had some speculation. Now, prices have come down 15%. And we've just seen this month New Zealand's population increasing and New Zealand house price plateauing / increasing. So I believe we're at the bottom of the market. And when we see the bottom of the market, I believe that a huge amount of people are going to jump in and start to capitalize on that opportunities. So we're expecting to see our prices and our volumes increase over the coming months. And the main reason for that is because of the fundamentals that are still in place for the New Zealand residential home. So a bit of a summary. The market has proven that we do have cycles. The median house price has consistently gone up 8% for the past 42 years. There's a lot of global certainty and global unrest that make New Zealand a very desirable place to live. New Zealand's population is constantly growing. The number of homes being built aren't enough to match our growing population. The average number of people per household is decreasing, and the cost of building a home is increasing. So what you're looking at here is the New Zealand growth story, and this is why we are so heavily invested in property in New Zealand. So let's now talk about Williams Corporation, our market position, our track record, our products, and our equity. So as of July 2022, Williams Corporation was the second largest builder in all of New Zealand, consenting 758 dwellings. Now, I want to talk a little bit to you about this report. So this is called the BCI New Zealand Top House Builders Report. Now, BCI stands for Building and Construction Institute of New Zealand. Now, this is a very important report because for some reason, lots of builders in the market seem to over-embellish their numbers and make statements about the volume of work they're doing that is factually incorrect. And that's where it's really good for you, the consumer, to look to an independent report, such as the BCI report, and see how many homes per year each company is building. So you can see GJ Gardner is a massive company. They're also a mixture of lots of franchises. You then have Williams Corporation, Fletcher Living, Mike Greer, Signature, Classics, etc., and the list goes down. Now, this does jump around month to month. I actually think in the most recent one that just came out, Greer had jumped ahead of us. They do the top sort of three people, Williams, Fletchers, and Greer, we do jump around. But you can see in the volumes here, there's us and then there's a gap when you go down to the next builders. But look, the main thing I want to emphasize here is Williams Corporation is one of the largest builders in New Zealand based on independent reports, and this is what building consents we are getting now. So this shows our settlements for a rolling 12 months. So this is how many keys we have delivered to our customers. And there's a few great things to point out in this report. The first is we have delivered 656 houses in a rolling 12 months, which is absolutely huge. An average month in Williams Corporation, we're giving 54 keys to customers. So that is 2 customers every single working day. We're delivering them a home. And the other really cool thing is the spread of where we're building these houses. So you can see it's really evenly spread across Wellington, 200 houses, Auckland, 220 houses, and Christchurch, 220 houses. So we're really, really consistent in that delivery. And then our sales for a rolling 12 months, you can see we've sold 443 houses in a rolling 12 months, which is a great result. So we will be slightly smaller this time next year because our sales are slightly lower than our deliveries. So that means 12 months from now, we're going to be delivering more like 40 houses a month rather than 50 houses a month. Now, this paints a really cool story. This shows the Williams Corporation growth story. So starting in 2016, we delivered 3 houses, 2017, 20 houses, 2018, 40 houses, 2019, 61 houses, 2020, 181 houses, 2021, 335 houses, 2022, 494 houses, and this financial year, 2023, which is just over halfway finished, we've already delivered 350 houses. So we are on track for deliveries somewhere between 600 to 800 houses this financial year. And we have turned over $800 million of houses that we have built and delivered to our customers. Now, a little bit about our product. We've invested so much time and energy to make houses that are affordable to buy, affordable to live in, and affordable to maintain, where you can live, work, and play. We're very proud of our townhouses. They're very well located. They're low maintenance, well built, and we dominate the market because of the quality of our product. Why are our homes so popular? Low maintenance, affordable to buy, affordable to live in, and affordable to maintain, where you can live, work, and play. Well built. We do not have price escalation clauses. They're turnkey with all the appliances provided. We have fixed price contracts with only a 10% deposit for Kiwis and a 20% deposit for people outside of New Zealand. We help you with the insurance. We've got really great insurance on our finished houses. We bulk buy that. And when you purchase a new home, you get benefits such as a 5-year bright line and interest deductibility, etc. Now, because we're going to talk about Williams Corporation Capital, I want to talk about the strength of the balance sheet of Williams Corporation. So Williams Corporation has $52 million of tax paid cash. Now, this excludes any business valuation. Williams Corporation is a fantastic company that's worth a lot of money, but this is just our cash. So it shows really the financial strength and balance sheet of the company. So now we're going to get into the products that we want you to review investing in today, and that is Williams Corporation Capital. So we're going to do an executive summary, who is eligible, the return of the investment, the security, the withdrawal procedure, funds under management, our dividend history, our monthly updates, the allocation, the investment process, and a summary. So let's get into this. So a legal disclaimer before I start. This offer is open to wholesale investors. A wholesale investor is someone that has $750,000 of cash or $5 million net worth. The full description is in the IM and on the FMA's website. This is a financial product, so please make sure you seek your own financial advice before making an investment decision. So the executive summary of Williams Corporation is, at Williams Corporation, we sell more houses than our cash allows us to build. So we need to go out to you, the investor, and say, We don't have enough cash to meet the demands of our customers. Can we borrow money from you and we will pay you a 10% return so we can keep building homes for these customers? The eligibility, so this is a wholesale investment. So people who are eligible to invest in this is investors who are relatives of the directors, investors who are close business associates of the company or the directors or senior management, investors who invest at least 750,000, investors who are in the business of investment, a large investor with net assets or consolidated turnover of more than 5 million for the last 2 years, and other investors that comply as per the Financial Markets Conduct Act of 2013. This opportunity is not available to retail investors. So the return is 10% gross per annum, and we have a imputation credits and withholding tax of 33%, and this is paid out quarterly. So it's paid out 2.5% every quarter. The security. Now, the security is going to be broken into 3 parts. The first is the operating rules. So before construction begins, pre-sales must total at least 70% of the project's value. When funding a project, the total funding of Williams Corporation Capital and any other funder cannot exceed 70% of the project's completed value. A standardized drawdown table is created before the project funding is released. And investors' funds can only be used for acquisition of sites and developments. So we can't use your money to go buy a shopping mall or to go and buy shares. We can only use it to do what we're good at and what we've been doing for a long time successfully. The base security, myself and my business partner Blair have put in the first $5.9 million into Williams Corporation Capital as B-class shares. Now, what is a B-class share? A B-class share means we cannot withdraw that money, and in the event of a loss, that money gets spent first. Investors receive the benefit of a personal guarantee from Matthew Horncastle and Blair Chappell. This does extend to our personal trusts. And investors have the benefit of a guarantee from Williams Corporation and the Williams Corporation Group, which has an equity base of $52 million. And then you receive security over all of our projects. So there's 3 kinds of security. The first is a deed of assignment. That is before we settle the project, which means that this entity owns the contract. Next is a first mortgage, normally when we've purchased the project and just started works. And then is a second mortgage behind any first mortgage funder, such as a primary bank. Now, with next year looking like we're going to do less work than we are this year, we can see a big percentage of the work being done via first mortgage. The withdrawal process, once you invest, you have a lock-in period of 12 months. The directors must act within the best interest of the shareholders/investors. After you've had your 12-month period, you're allowed to withdraw, but you need to give us 6 months notice. If we have more than 33% of people trying to withdraw in the same period, we can extend the withdrawal period from 6 months to 12 months. And that just allows us to deliver the houses we're building safely. And if an investor is purchasing a Williams Corporation home, they're allowed to withdraw their funds to match the settlement of that home. So a customer that has, say, they're buying a house and they put a $100,000 deposit down, they're allowed to put the balance for settlement in this fund and know that that will be available at the time of settlement. So this shows our funds under management. So you can see from November to October, our funds essentially have been on an average month for our funds. We would receive $3 million of new investment and have approximately $2 million of withdrawals. So you can see over the past 12 months, a slow growth of the funds under management. Now, we would love to grow this from 156 million to about 230 to 250 million dollars, because that means we could fund everything we're doing with cash and just deal with you, the investor, and the projects we're building, which would be fantastic for what we're trying to achieve as a business. This is our dividend history. So you can see since 2019, we've paid $25 million to our investors. So that's something we are incredibly proud of. We've always done what we said we were going to do. Now, when you invest, you receive monthly updates from myself and Blair Chappell, the other managing director. And we essentially cover to you the sales that we're having in Williams Corporation, what settlements we're doing, a summary of cash we've received, a summary of houses and our work in progress and what is available for sale, update about the market, an update about how we're training, and an update about the fund you're invested in. So you could see Williams Corporation Capital in the August update. We had $137 million under management, and $30 million of that was held in cash. And then you have this document here, which is our allocation table. Now, this is a fantastic document because you can see all of Williams Corporation on one page. The first column shows you how many units are in a development. The next shows you how many of them are sold, what company is doing the development work, the address, the city, the security, the project sale price, the 70% LVR cap, how much Williams Corporation Capital and the First Mortgage Funder is funding, how much the First Mortgage Funder is funding, the opening position of Williams Corporation Capital, any money that is returned or drawn for the month, the closing position of Williams Corporation Capital, what is happening on site, and the estimated delivery date, as well as some totals down the bottom of the page with things like what percentage of our total book is sold and what percentage of houses under construction are sold and what is secured by first mortgage or second mortgage, etc., in each city. Now, the paperwork process is very, very simple. We have a Google Drive link that has all the information for you to assess the risks and the merits of the offer. There are 3 forms that are very easy to fill out. You can have a client consultant from Williams Corporation help you through the process. We then audit the completed forms and we send you a trust account number and then you deposit the funds. So as a summary, we're good people. We run a good company. We would love to have you in as an investor. Once you've sought your own financial advice, if you wish to proceed with this decision, that would be fantastic. And if you want more information, you can request the full Google Drive from any of our client consultants. My personal contact details are attached right here. If you wish to contact me about anything, I'm always available to help an investor through this process. So you can see there my phone number and my email, and I'd love to see more of you. So I hope you enjoyed that. I always enjoy giving these presentations. We have so much we want to achieve and we're doing such great work. So we do always need more investment to achieve our goals and to build all of these houses for our customers. So if you are considering that, please get in touch. Have a great day and I'll see you next time.